Hello to everyone and very good evening. So just a quick summary of what we have seen today, and it has been a pretty busy session, quite a bit of a pickup in volume ahead of that key ECB press conference tomorrow, and actually that press conference being a major driver today with a lot of source comments from Eurozone officials. So we have seen from a source that the ECB is not in discussions to cut their interest rate tomorrow, so that currently stands at 0.75%. In terms of expectations at the moment, it's roughly 50-50 for a rate cut. Around 50% of those surveys going for a cut of 25 basis points to take the main reference rate to 0.5%. However, a lot of talk over whether they will indeed take the deposit rate to minus 0.25. At the moment it sits flat. It looks more likely there'd be a narrowing of the corridor if they do cut the main reference rate. Apart from that, we've also seen sources note that if the ECB do start buying, or when they start buying, they will not have preferred creditor status on the bonds that they buy, so just increasing demand from investors, as the ECB will no longer be the preferred creditor there, and also the ECB will indeed sterilise all their bond buys. This fits within the mandate. At the moment, ECB not allowed to buy bonds without sterilising, as this could potentially be seen as printing. So again, just boosting appetite there for riskier assets. As well as that, we have also seen sources from the German Chancellor Merkel. So she was talking to lawmakers in Berlin. Those comments leaked, and apparently she said that she is still opposed to ECB unlimited bond buys. However, she is in support of buying of shorter dated paper, i.e. those maturing between 0 and 3 years. So again, opposing unlimited buys, but supportive of buying in the shorter end of the curve. Now, apart from that, we have had weak Chinese data overnight, so this has prompted market talk of a possible rate cut from China tomorrow. The last two times we've seen China cut rates, it has been just moments before the Bank of England rate decision, which is due out tomorrow. So in terms of the Bank of England rate, the surveyed analysts are going for unchanged for the rate and the asset purchase facility target, and that's as that bond buying programme doesn't quite conclude until November. That's when expectations are for a booster, but worth bearing that in mind for China tomorrow, as well as the ECB press conference. So that's at 1:30 London time. The rate decision from the ECB 45 minutes earlier at 12:45. Looks to be a very busy session tomorrow with those events, but also in the European session, both Spain and France coming to the market. Spain comes to the market with 2 3-years and a benchmark 5-year. So this is in the short end of the Spanish curve, and just before that ECB conference, it should be very interesting to see appetite for that, although it's very likely we'll see lower yields considering the rally that we have seen in the shorter end of the curve since the ECB press conference. France also comes to the market, slightly longer dated bonds. They're auctioning their 10-year. Worth of note, however, today we did see the German Bund coming technically uncovered, so it could be an indication of appetite for French paper in tomorrow's session. As well as that, we do have the Department of Energy inventory numbers for the latest week, a day later than usual, considering we had the market holiday on Monday for the US. And we've also got the refunding announcement from the US Treasury in the 5s, 10s and 30s. We've also got several speakers tomorrow, so it looks to be a pretty busy session. For the time being though, that is enough from me. Hope you have a very pleasant evening, and hope you have a great trading day tomorrow.